What's up, guys? Welcome to another video. Today we are going to be looking at the introduction to accounting. So overall, accounting is simply just the practice of recording transactions, keeping financial records, performing internal audits, analyzing financial information, and the overall advising in certain financial matters. So the first topic we are going to cover today is regarding debit and credit. So debit is to the left side. Assets and expenses always have a debit normal balance. Credit is to the right, however, and liabilities and owner's equity will always have a credit normal balance. To make this simpler, an accounting equation can be formulated. The formula is assets equals liabilities plus owner's equity. A more exact and specific version of the formula will get you a more accurate answer can be written as assets equals liabilities plus controlled plus capital plus revenue minus expenses plus dividends. So the next topic in accounting we are going to cover is the accounting cycle. So this is a typical accounting cycle that an accountant would encounter. So the first step of the cycle is to analyze transactions. The step afterwards is to then journalize these transactions. The next step is to then post these journalizations. This is when the transactions in journal are shifted to a general ledger. The fourth step is to prepare unadjusted trial balance. The fifth step is to then adjust accordingly. After the fifth step, the sixth step must be commenced. And the sixth step also requires the adjusted trial balance to now be prepared. After this, the seventh step is to prepare statements. The eighth step is to then close. This now ties in with the ninth step, which is to prepare post-closing trial balance. Now, it is important to remember that this cycle must be repeated. So another topic we are going to cover in this video is the T account. So in the T account, this right here shows an example of a ledger account and what will be positive and negative in terms of debit and credit. Now, all of these depend on the category. For example, in assets, debit is positive here. However, in liability, it is negative here. And it's vice versa for credit in these two categories. So now we're going to talk about the different types of financial statements and go in depth in them. So the first type of financial statement is something known as an income summary. An income summary is a statement that reports a company's financial performance over a specific accounting period. Financial performance is basically assessed by giving a summary of how a business incurs its revenues compared to expenses through both operating and non-operating activities. The next type of financial statement is known as a balance sheet. So a balance sheet reports a company's assets, liabilities, and the shareholders' equity at a specific point in time and provides a basis for computing rates of return and evaluating its capital structure. It is basically a financial statement that provides really a snapshot of what a company owns and owes, as well as the amount invested by the shareholders. Another type of financial statement is what is known as a statement of retained earnings. So basically, this is a financial statement that outlines the changes in retained earnings for a specified period of time. It then reconciles the beginning and ending retained earnings for the period using information such as net income from the other financial statements. Retained earnings are the percentage of net earnings not paid out as dividends. The last type of statement that we are going to discuss today is a statement of cash flow. In financial accounting, a cash flow statement, also known as statement of cash flows, is a financial statement that shows how changes in balance sheet, accounts, and income affect cash and cash equivalents. And it basically breaks down the analysis to operating, investing, and financing activities. It shows the total changes in the cash account and is used to analyze where money is coming from and where it is being spent. So now it is that time in the video for the practice problems. So the first problem is that Consulting Services 101 is currently meeting with investors to discuss investments. They need to raise money and show investors that the company is active and has active operations. What kind of financial statements will they show? Now they need to show the investors they are profitable. So what will they show? So the second problem is that what is the basic accounting equation? And you need to draw out the account names on a T-chart. So the next section is not really a problem, but it's more of like an activity that will really help you understand the real accounting cycle. So the goal of the game is basically to play Monopoly, but for each transaction, journalize and post the amounts. So it's like you're following the real accounting cycle, and to go through the full accounting cycle after the game and treat it as one fiscal period. So basically, that concludes our video, guys. Thank you for joining us today.